Now let's get to the morning brief, shall we? And it has to do with Robinhood. Myles wrote about not just Robinhood, but like the bigger significance of what Robinhood is telling us about the cycle in terms of the reception for the IPO yesterday, what it tells us about the meme stock phenomenon, what it tells us maybe about the retail trading phenomenon also. Was this an inflection point, do we think, or are we still figuring that out?
Well, I think the very easy and pat way to look at Robinhood's IPO was, Coinbase marked the top for some sort of crypto cycle here, then Robinhood will mark the top for some kind of retail investor cycle. I'm not so sure that that's going to work out. I think that's a little bit too clean. But I think when you have another IPO underperforming right when it comes public, I think it's a nice check on the temperature, let's say, within the market, right? If this was still a full-on meme environment, I think Robinhood shares probably would have gone up, the way that, remember when Bumble shares popped on their first day of trading? What's that stock done since it's been trading? It's off like 30%. Robinhood here, they priced ultimately conservatively, low end of their range. The valuation for the business right now is around $30 billion or so, a little bit less than that. And ultimately, I think there's still some questions, Brian, about what's the value of each user and how much, you're putting a couple $1 billion of market cap on each million of its user base right now. That was sort of the implied valuation. Is that right? I think the market today is saying that's probably not. Look, I think in a world where people in the traditional financial markets generally don't like Robinhood, I feel like I find myself being a Robinhood defender of sorts because I think the product is really good and I think they've done a really cool thing. But the market clearly is not that enthused with it. We're already down here, under 34 for an IPO that, again, as I mentioned, could have been up as high as 42 when that roadshow started.
No, great points there, Myles. And it is amazing to me just to see this action. I saw it down close to 4% at 1.2, but I think that what you're seeing here is the lack of retail support. And there were some reports there yesterday. So they had allocated, 35% to their retail? Up to 35%. Yeah. The reports that I saw, only 20 to 25% of that actually went through. So you're seeing, I think, a lack of retail support, which is just ironic given that this platform is all about the retail investor.
Yeah.
Which all raises the questions, even more questions. Do these retail investors, when do they come back into Robinhood? To what extent? Are the relationships strong? If you're a Robinhood trader today, do you go and use a Webull? And where does it go from here?
Well, be careful what you wish for. If you want a more educated investor base, maybe they're going to read the prospectus. Maybe they're going to take the risk factor seriously and not end up buying the IPO.
Yeah, and look, I think on balance, I'm always going to say more people being in the market is good. Right? Better than fewer people being involved in the market, and the way that the product maybe incentivizes certain types of behavior. Conversation to be had about that. Ultimately, what is the model? Kind of very quickly touched on this, but you look at the increase they've seen in their revenue within certain business segments. The revenue is growing faster than they're growing their users, which means they're bringing on users who are engaging with the platform at a higher rate. How long does that continue, and what does it look like when you start selling them 3 basis point ETFs and a little bit of financial planning and all that kind of stuff? I don't really know, but I think, for the Robinhood team, I think you should be happy that this is just over with. This process is over with. Now you go about life as a public company, and I know I bring it up too much, but you look at Evan Spiegel and the way that Snap reoriented itself, made some management changes, settled things down, and now they're executing at a very high level, 4.5 years after going public. I feel like that's where everyone should want to end up. Even Facebook had its problems when it came public, too.
Yeah.
A lot of that was about the offering, but it wasn't all smooth sailing for them. So I think if you're Robinhood, if you're Vlad Tenev, okay, you got it, you're done, under some pressure, maybe it wasn't perfect, and now you can go about running the business.
Yeah.
It didn't feel that exciting. You know what was more exciting? The Traeger IPO. I mean, those guys lived it up on the floor. I mean, it lacked a little enthusiasm for me, Robinhood, but maybe that's a good thing.
I feel like they probably wanted to play it that way, right? Hasn't it been exciting enough? Yeah. He got to testify before Congress before he went public. Not in a fun way. Well, he wasn't an expert witness, let's say.
There's not a lot of pressure when you're talking grilling.
I didn't feel the juice.
That's just no pressure IPO in that case.
I want the juice.
Juice is associated with the